What's up, traders, and welcome back to another weekly Forex forecast. Last week was all about the non-farm payroll, and this week it will be all about the inflation data. Non-farm payroll, we could say somehow disappointed because the numbers are still below 200,000, or the ideal numbers as per the authorities should be above 250,000 for a very healthy job market. So we could say it from one side, it disappointed. The job market in the US added only 115,000 new jobs, while the unemployment rate remains 4.3. So this is the disappointing part, but on the positive view, it still added jobs. So it's kind of tricky and mixed emotions about the non-farm payroll. But for the coming week, it will all be about the inflation data. So as per the expectations, we have the monthly read and the annual read, and these numbers are very critical. And the reason for that is, as this gives sort of a hint what the Fed will be able to do on the next trade decision. So positive numbers, or numbers that show that the inflation drops closer to 2%, which is the ideal target by the Federal Reserve, would give a great chance to understand that the anti-dollar moves are likely to continue. And on the other hand, if the inflation persists and the inflation is back, which very possibly to happen, then the Federal Reserve might not be able to cut, and the pressure on the Federal Reserve is huge. So what does all that mean in terms of the charts? Let's start with the euro dollar, which is the first one, and this one has a very I would say mixed read at the moment. And the reason for that is because right now the euro dollar stands in this price structure where we had two waves to the downside, and right now we are still moving within this acceptable ranging corrective mode, I would say. So there are two scenarios here. Scenario one, this zone holds, the peaks hold here, and this resistance area surrounding the 118 managed to hold. We see the euro dollar breaks this range, and that could open the doors for the euro dollar to drop back down to this rising supportive line, probably in between the 116 to 115 area. On the other hand, if the euro managed to break above this high, get the scenario where we have higher highs on the chart and higher highs on the MACD, that will provide three higher highs, higher lows, bullish momentum, bullish price structure, and from there, buy the dips would become most likely the correct trading plan. A very interesting one from my point of view for the coming week, maybe even further than that, is the pound yen. And the reason for that is, let's start with the higher time frame, is the weekly chart. We can even go to the monthly, but look what builds up here. The strong bearish pressure. While the market makes higher highs, the indicator starts to make clear lower highs on the MACD, and that's a very, very positive bearish positive news or negative sign on the pound yen. Plus add to that the fact that the Central Bank of Japan already starts to send warning of possible intervention, and of course some actions against those who go massive bets against the Japanese yen. So with that idea in mind, we should be looking for a sell, and there are two scenarios for that. Scenario number one, as we are already in a situation where we had fake high, we might have another fake high over this dynamic resistance and the last peak, and from there a massive drop. So something like that, higher highs on the chart, lower highs on the MACD, fake breakout, retrace below the last high, and then very, very possible aggressive move to the downside, and I would not be surprised if that happens, we will go below 208 or maybe beyond that directly. And on the other hand, since the bearish pressure already started, the pound yen might be moving within this sort of a range here, break below this zone, some pullback for the retest, and that also could open the doors to the for the bears and for the price to drop towards 208, 207, maybe even beyond that. So I believe the pound yen is building up some massive moves if on the coming week or the following weeks. We are not here to predict or gamble when exactly it's gonna hit, but it definitely builds up interestingly, and I would be watching this pair, and not only the pound yen, the rest of the yens as well, but this one is building very, very good price structures. Let's look where the Bitcoin is. We have been following the Bitcoin the last few weeks, and if you missed, make sure you subscribe and follow our channel so you know what's coming. We've been talking about the Bitcoin and this critical area, the broken range that is now expected to be retested, and from there build up the bearish pressure. So the closer we get there, the stronger the pressure starts begins to be, as we can see, and we are right now at that very zone, as you can see. So the bearish pressure already builds up, the market is making higher highs, the indicator makes the lower highs. That to me is a sign that the sellers build up. The way it could behave is break below the recent low and the rising trend line to open the doors for the sell, or more likely something like that. An attempt to make a rally usually ends up as a trap under continuously developing bearish divergence conditions. So while the market makes higher highs, indicator makes lower highs, indicating that the flow of the money reduces, and from there looking for the Bitcoin to drop to the downside. The way I see that, as long as this zone holds here, and we are talking about 84 up to 90,000, maybe slightly higher, as long as this zone holds, the bearish pressure is still on, and for me, rallies should be providing sell opportunity. And the final one is going to be gold. Why gold? Because look how beautiful this price structure begins to look like. Two waves down, which was very likely to counter with these two waves up, and look on this area. Let's zoom in. Look at this beautiful zone right here. Double doji, two doji, followed by massive bearish pressure to the downside. That is a strong supply area, and gold is very likely to keep it as is, the zone of the sellers. So this is very likely to complete two waves upside or remain under these ranging conditions, break down below the rising supportive line in the range, and start its next drop. So on the lower time frame, if we start to see something like that and developing bearish conditions, this is the sign for us to look for the sell opportunity. I believe that any rally on the gold that happens right now is still providing opportunities to look to sell. I do not think the bears finished with the gold. So that's it for the coming week. I hope, as always, you find value in these trading opportunities. If you do, don't forget to like. If you are new to this channel, make sure you subscribe so you can enjoy more of our trading opportunities, more of trading insights and trading education we share here with you in this channel. Thanks for watching. I wish you wonderful trading ahead. Best to you and yours, and I'll see you soon with more good trading. Bye for now.